I'll talk in this video whether we are heading for a recession and what's happening to the stock market. So for that, what I'll do is that I'll go to a website called Trading Economics. It's a very good source for the economic and financial data. We've got a bit of a stock market also for the different macroeconomic variables. And the thing is that they also give you the forecast. They use the macroeconomic models to forecast these indicators, stock prices and other macro indicators. So let's see. Okay, so as you can see, there is a, I'm sure you have already heard about it, that the stock market has literally crashed in the last few weeks. And yeah, I think it's perhaps the biggest drop in the last 20-25 years. Is even bigger than during the Lehman crisis, and that's quite serious, right? So the world is going through pandemic, and people do not know for how long the lockdown will be in place, and that's one of the reasons why investors do not have much confidence on the stock market, and they're pulling out money from that, and therefore we see such a crash. So this is a 1-year trend, okay, and this is from May 2019 to April 2020 with bit of a forecast here. As you see that it actually did well in the last 1 year, right? It stayed constant for some time, but at the end of the year it actually went up. So what I'm showing here is the Dow Jones Industrial Average, okay? So this is the index. It was going up actually, right? It was going up for 4-5 months. Up until February, it was still going up and doing well. After February, when things started getting worse in Europe, especially in Italy, where the coronavirus cases were increasing every day, and the death rate, the number of deaths were also quite staggering, then things were very bad actually. People expected that this will become a full blow pandemic, and which is what we are now seeing. So, and then the stock market crashed. Numbers started increasing in US as well, which caused further damage to the stock market. And you see that from very high to such a low, right? From almost 30,000 to close to 18,000. That's a significant drop, right? Over 30% drop in the 40%, 30%, 40% drop in the stock in the index value. It's very bad. However, it is getting a bit better, especially after the stimulus by the Fed, and also the recently announced stimulus by the European Union. It's happening everywhere in the world, like in UK, in emerging markets such as China and India. China is recovering a bit from the coronavirus crisis, so there's some positive news, okay? However, it's still not very clear when this pandemic is going to be over and what's going to happen actually for the next 6-7 months. So we will not see much of a fluctuation. Maybe there will be a slight correction to the market. It will be a bit better, but I'm not sure. If you see on a daily basis, like from yesterday and today, most of the indexes have actually gone up a bit. Okay, that's because of the stimulus packages that the governments are announcing. So it's getting a bit better, but overall level it's still quite bad. Okay, so let's compare the individual stocks. Okay, so it's just a year on year comparison. So it's the stock price of today compared to stock price a year back, but it's moving average. Okay, it's not like one day, it's more of a moving average. So when you compare with Apple, right, you see that it's still on green side. That means the 35% increase in the stock, even if you take today's price. Same with Microsoft. So one thing is clear. So the corona is not affecting the technology industry as much as it is affecting or impacting the other industries, such as commodities and oil and gas and things like that. Similarly, you see ExxonMobil, it's exactly the opposite way, right? Its price has gone down by 50% in many ways, right? It's because of the oil price, one reason, but also for the corona crisis. Pfizer is having a negative I'm not sure why it's happening actually, because it's a pharmacy company and there's a lot of demand for the pharmaceutical product, but maybe some idiosyncratic reasons for why it's happening. Chevron, Cisco, so all the hardware companies and where you have commodity, um, is it's quite disappointing there. Just taken a big hit. Boeing, as expected, price has gone down by as much as 60%, which is quite expected because the tourism industry has been hit quite heavily by this crisis. Uh, yes, you also see 3M. I don't know what kind of a company is this, but General Electric, yeah, American Express, all of them, almost all of them have been badly hit, but except maybe the tech companies, which have somehow not that greatly hit by the crisis. Yeah, but so it's interesting to see what's going to happen in the next few weeks. Okay, we're expecting that there will be a peak in the next few weeks, but it's also not sure if that's going to happen or not. So, but we also have some macroeconomic very forecast models, right? So if you go to forecast here, we'll see the forecast. You see that now we are here, right? It will go up a bit and then it will start going down. So it sounds very gloomy, it sounds very disappointing, very pessimistic, frankly speaking, that for the next 1 year or so, and this is until April 2021, until the next 1 year, the economy looks very bad. So it doesn't look like, it's going to get better anytime soon, at least for a year or so. So if you take the 1 year forecast, it looks very bad, right? People are talking about whether it's going to be as big as the Great Depression in 1930s, early 1930s. Well, that's something that cannot be assessed right now, because we are not at the peak of the crisis, right? So it's, well, we can expect that something of that type might happen. There are still good chances of that happening, but next few weeks will be very important from economy point of view. Obviously health is important, but the impact on the economy is also quite substantial, and if we have this crisis for a very long time, then this will have a catastrophic impact, not just on capital market but also the overall health of the economy. All right, so this is about it. You can also see the other websites where you have Yahoo Finance. Also there you have very good analysis done. Even in Wall Street Journal website or Financial Times, they have their own forecasting models and so on. So I'm not saying the forecasting model used by trading economics is the finance forecasting model. They have obviously assumed a lot of things, and these assumptions may not be true, right? And there are always issues with the models. And of course you have confidence bounds also. For example, here also you see the confidence bounds are quite wide because it's very uncertain what's going to happen. So it could go either way, right? So it could also be the case that we do not have that big crisis, but crisis will happen for sure. That's something we're almost sure about it. Everybody's talking about it, including IMF, all the global think tanks, organizations, top economists. It's probably very sure that it's going to be a downturn year, but to what extent this will be is something that we'll come to know in the next few weeks, a few months. Thank you.